So what is a candlestick and what are candlesticks doing in the stock market? So when you're looking at a stock and you're looking at a chart to figure out if you want to buy or sell a stock, um, just looking at something like this really doesn't tell you much. It kind of shows you where the price is, but it's not telling you if there was a lot of selling, a lot of buying, if there was maybe a gap during the day, or if there was some indecision. The line chart doesn't give you much justice. When you jump over to a candlestick chart like this tells you a much better story of how the stock is performing. So before we even look at this, we got to understand what each of these candlesticks mean and why they all look different. Now, it's pretty basic, and you may have already figured out some of the pieces to this puzzle, but this is pretty much it. You have four parts of a candlestick. You have the open and close and the high and low of the day. So the wick, this thing that you see up here and down here, this is the wick, right? Just like candles have candle wicks. The bottom of this wick represents the low of the day. The top of this wick represents the high of the day. And then the bottom of the actual candle part represents where the stock opened. And then the top of the candle part represents where the stock closed. Now, this is for a day where the stock did well and the stock went up. That's why it's green. Green means good. Red is the complete opposite. Red means the stock went down. And all that switches are the open and close. This means the top is the open and the bottom is the close. Now, not all candlesticks are created equal, right? Depending on how the day is doing and how the stock is doing, you could have different outcomes for the candlesticks. You could have some candlesticks with a very long bottom and a long bottom wick and a small top wick. You could have some without any bottom or top wick. This one doesn't have a bottom wick, but it has a long top wick. You could have some with a short centerpiece. This one was the example, the regular one. This one looks pretty normal too. You could have some without any wicks. That means that the stock opened here, went up the entire day, and closed at a high. Then you could have some that look like this. It has no middle part, no candle part, just a wick. This means that it opened and closed at the exact same price for that day or trading session. So now, if we jump back to the chart, you could have a better understanding of what all of these little candlesticks represent. And we're looking at the day chart, right? D for day. And if we zoom in here, we could see some of the candlesticks that we were looking at in my little examples. So right here, this one opened at this price, closed at this price, but it went all the way down for that day, and it made its way back up to here. So red, that means it closed, trading down. The one right before it, it went up. Here's this one where it opened and closed for the same exact price. Here's one where the wicks are very small, so pretty much open down here, rode all the way up for the entire day, and almost closed at its high for the day. Here's one where you have a big wick on the bottom and hardly anything up top. But now you have a better understanding of how to read candlesticks. And you may be thinking, why are candlesticks important? And that's because there's patterns within these candlesticks. So when it comes to, say, day trading or short-term trading, depending on these candlesticks and what you're seeing, you could find patterns to try to predict what the stock will do in the future. So you could look over here. You have 1, 2, 3, 4, 5 days in a row that are going up, and a lot of buying were happening. You could suggest that it was overbought at this point, and that's why it started to go down. Looking over here, you could see the same thing. You have 4 days in a row of it going up. So it's no surprise that it's starting to come back down. So this is where day trading comes into play. But instead of looking at just the daily chart, you also may be looking at a 15-minute, 5-minute, or 3-minute chart. So if we jump over to a 3-minute chart, got to zoom out a little bit. So a 3-minute chart, if you're trying to day trade, you can figure out what the stock's doing for the day or every couple of minutes. You can see right here it kind of had a spike up. So it's probably going to roll over, which it did. Looks like there's a support line here, and that's where the candlestick bounced. So there's all of these things that you could do to analyze the stocks just by looking at the candlesticks. You go to a weekly or a monthly chart, so you can see how the stock is doing each month. You can see where the high of the stock was. Right over here was the very high back in July of 2018. And then it was oversold, so now it's starting to come back up, so it might be a good stock to invest in. But that's candlesticks. Candlesticks is a great way when you're looking at the charts, and you can add other things into it. You can look at the volume, you can look at some moving averages or exponential moving averages as well. A lot of people use these 3 things: your simple moving averages, your exponential moving averages, and volume to really analyze a stock. I'll get into, in a future video, I'll get into all of that, how you could read all that kind of stuff. But before any of that, the most important thing is just learning how to read candlesticks.